The next thing that we need to have a look at is investing activities. Now, investing activities are purchases or sales of property, plant and equipment. So the two accounts that we're interested in are property, plant and equipment and accumulated depreciation. I think we also, no we don't, we'll throw in depreciation expense just for completeness. Property, plant and equipment, we start with 483,550. We end with 511,470. Accumulated depreciation, we start with 167,230. Come all the way down here, and we end up with 185,710. Depreciation expense is a profit and loss account, so it doesn't have anything to start with. Now, question for you guys. Property, plant and equipment. What are the ways that a property, plant and equipment account can be increased? So we can have a revaluation, absolutely. That's one. You can buy things, that's two. There is a third, it's a little bit, I'm just being tricky for tricky's sake, but there is a third to that. Revaluations, we can buy things. Yeah, we're worried just about an increase. There is a third one. In relation to, it's sort of, we talked about it in the same vein as revaluations. Starts with an I, actually it's two words. Impairments, but not the impairment itself. A potential reversal of an impairment. So if there's been a reversal, obviously, but it is technically different than a revaluation, same sort of idea. So there's three essential ways, maybe there's more, but there's three ways we're interested in. There's reversals of impairments, there's revaluations, and there are purchases. Now, is a revaluation a cash item? No. Is a reversal of an impairment a cash flow item? No. Is a purchase a cash transaction? Yes. Possibly. Possibly it could be. You could have consideration other than cash. However, for what we're doing, if you do not get told anything additional at all, if there has been a change up, it is a purchase. And it is a purchase for cash. If you're told additional information, we may say they bought, this was an equity transaction, they bought cash and issued shares for as consideration. In that case, it's gone up, but it's not a cash flow transaction. What are the ways in which assets, property, plant, and equipment can go down? You can have a reval, you can have an impairment. It's not going to, depreciation will have an effect on the net asset, but not on the actual asset, property, plant, and equipment, like the actual property, plant, overall property, plant, and equipment that we're looking at. You can sell. Yes. Now, in this case, we actually get told information that there has been a sale. And we get told in item 1 that the property, plant and equipment originally costing $50,040. So we're just going to focus on property, plant and equipment for the moment. So we know we've got $50,040, and that is the only thing we know about movements. 480 minus 50 odd gives us about 433. We still have a gap. So that gap is a debit side gap. We have a purchase, and it is a purchase for cash. We're given no other information. And that purchase is $77,960. So we know that is going to be gone up because they've brought assets in. That asset has been brought in and has been paid for by cash. So if you look at the cash flow statement, you have an acquisition of property, plant and equipment, $77,960 cash going out, which is why you've got it there. And if we want to be absolutely complete, up here we would have the credit to that, $77,960. But that is not the end of the story. Because if we sell the asset, we may not have got cash consideration, but again, if we don't tell you anything, we just assume it's cash consideration. We've got to figure out how much cash we actually got, because the asset originally cost $50,000. Doesn't mean that's what the buyer gave us. But in this case, the question is quite nice and straightforward, because it originally cost this, and it was sold for $7,150. We actually get told straight up front what that price was, which means the proceeds from the sale of property, plant and equipment was a cash inflow of $7,150. So that's relatively easy. Now, I'm going to go through an additional step, but not that we need it for here and now, but it is useful because you may come, not that you may, you do come across these sort of situations. When you have a derecognition, like a sale, we're going to have the consideration, in this case, which was cash. You're going to have getting rid of the accumulated depreciation, if there was any. You're going to have a debit or credit loss or gain, depending on whether or not it was a loss or a gain. And you're going to have credit the original asset. Now, we know that figure. We know that that was $50,040. We know that figure because they told us. If you only have those two, you cannot discern those two additional bits. You can't figure out that much. You've got to have something else which either tells you what accumulated depreciation is or something which tells you what gain or loss is. In this case, we told it was sold for $7,150. We're told its carrying value was $6,150. We know that that is a profit of $1,000. We know we have a gain of $1,000. I'm going to need a calculator for this bit. 50,040 plus 1,000 minus 7,150 gives us accumulated depreciation of 43,890. If we were to compare these two numbers, that'll be a difference of 6,150, which is what they said its carrying value was. I mean, we could have done it the other way, but either way, this is the depreciation which is gotten rid of. If we think about all of these going into the transaction, we've already put that one in. We're going to put 43,890 in here, so that's a debit that comes up at this point. Cash, we're going to put up in the cash T account up here. That deals with that one. And look, if you have a gain or loss, what have we got here? A gain account. Again, you don't strictly need it, but useful, at least to start with. So we've set up all of these transactions, or all this transaction. We pushed it off in its various places. Now, hopefully what you can see is this accumulated depreciation minus, this minus this does not equal 185. We've got a gap there as well. And that is your depreciation expense for the year. So 167,230 minus 43,890. The difference is 62,370. That is your credit accumulated depreciation. That is your depreciation expense of 62,370. Look, that is absolutely not useful for this question. We don't need that. However, there are going to be situations, and I have seen questions where you've got to disentangle. They've included kind of all your expenses, and you've got to back out of all those expenses the non-cash ones. So you might have to calculate your depreciation expense to get it out of what you're doing. So this is just a way to get that number. Whatever type of question you get, there will be enough information to work out the numbers that you need to calculate the rest of the numbers that you need. It may require some work, but it is there. So that's acquisition of property, plant and equipment, proceeds of sale of property, plant and equipment, and we end up with an outflow of $70,810. Now, because I'm feeling not